my great pleasure to welcome you to LuxCMA's webinar series. This inaugural chapter marks the one-year anniversary of the association and is the first of a series of insightful webinars that we will organize over the coming weeks. We hope to see you all in the virtual sphere every Wednesday for a thought-provoking discussion on the hot topics affecting our industry. Today, we will zoom in on blockchain, and we will continue on this topic next week. Then we will move on to sustainable finance and later cover essential topics such as ATAD, CLO, securitization, and market infrastructure. So make sure you mark your calendars every Wednesday at 2 p.m. for a LuxCMA webinar and plenty of interesting perspectives from our peers. We established LuxCMA to promote Luxembourg's capital markets industry both locally and on the international scene. Our ambition is to be the voice of our industry and the reference point for capital markets players in Luxembourg. We need to work together to strengthen our position and further our interests. We need to create ambitious, efficient, and effective capital markets where we measure our success on the impact to which we contribute. The best way to do so is to share perspectives and best practices, learn from each other's experiences, and work towards shared goals. Capital markets need to support the real economy, drive innovation, and help reorient capital flows towards green and sustainable investment. Capital markets need to be part of the solution and of the ongoing efforts to build back better. Luxembourg has proven time to time that it is able to create great value by combining its strong position in finance with an agile and open approach to innovation. It offers a business-friendly framework with an active contribution from public authorities continuously seeking to meet market expectations. As capital market players, we are in a truly unique position, and we should seize the opportunities that such a position offers. 2020 is a year that will certainly have a special place in the history books. With the global health emergency sweeping across the world and the social and economic crisis that followed, we all need to rewrite our rule books. Capital markets are more important than ever. The geopolitical context, however, was challenging even before the pandemic hit. Brexit is looming over capital markets. The consequences of a hard Brexit at the end of this year are still hard to evaluate. There will be no winners if close business partners such as the UK and the EU part ways in a conflictual manner. On the other hand, Brexit has highlighted the clarity and stability of the legal framework in Luxembourg. A number of bond issuers, such as ESM, have already opted for Luxembourg law as a framework of reference for their funding programs. Thanks to many of LuxCMA's members, Luxembourg is recognized for its robust and resilient infrastructure and financial ecosystem, on which markets can rely to operate their business. It is essential that we ensure the competitiveness of Luxembourg as a capital market hub by establishing and continuously reviewing a legal framework that is modern, practical, and that meets the need of the market. But where does our industry go from now? Capital markets play a key role in supporting the economic recovery throughout the EU and ensuring the competitiveness of European markets. The CMU, the Digital Finance Package, with its digital finance and crypto asset strategy, and the European Green Deal offer a roadmap for innovative, new ways of doing business. And LuxCMA can drive these changes. As capital market players, we must create the conditions for the real economy to grow and for companies, especially SMEs, to access market financing more easily. I count on your personal commitment so that together we can create sustainable and innovative capital markets in Luxembourg. The economic recovery from the crisis must be green, digital, inclusive, and resilient, and we all have a part to play. Together, we can create better capital markets in Luxembourg and beyond. LuxCMA for better capital markets. And now, to make the first edition of our webinar series extra memorable, we have the honor of welcoming Luxembourg Minister of Finance Pierre Gramegna as our special guest.
Ladies and gentlemen, it's a great pleasure and privilege to be addressing you through new technology on the occasion of the webinar organized by Lux Capital Markets Association. Lux Capital Markets Association is celebrating its first anniversary. Congratulations on that occasion, and I'm glad to be participating to the conference that you're organizing for this event. This being said, in this very special time of pandemic, capital markets have a specific role to play, and I'm going to address that topic in the first place, and then I'm also going to talk a little bit about how to deepen capital markets union and a little bit about Brexit, and finally going to speak a little bit about digitalization and sustainable finance. We live in very special times where countries are being challenged by a virus that doesn't know any borders, and it has forced all countries to take lots of measures to ensure safety and security of its people, and on the other hand, force them to do partial lockdowns. Fortunately, we have overcome the first wave in Luxembourg. We're now in the second wave, which I think we're controlling reasonably well, and the financial sector has been able to function nearly normally thanks to remote working, thanks to the digital infrastructure and data centers that are available in Luxembourg. Now, this being said, what has been done? Well, Luxembourg has spent no effort to do what is necessary to keep the economy going. The goal was obviously to amortize the consequences for companies of the partial lockdown. We have spent as much as 18% of GDP spent or mobilized in terms of subsidies on the one hand, in terms of postponing payments to tax authorities, and also by offering guarantees to companies. If you compare the Luxembourg effort, it is much higher in percentage than in most other countries, and the banking sector itself has been playing an important role in this. Now, the banking sector gave out moratoria in a very decisive manner to keep up the liquidities of companies, but the state and banks alone cannot fully support the economy if the capital markets are not functioning well. Now, the Capital Markets Union, as we know, is a project that's been ongoing in Europe for a long time, and we are now living in a period where it is becoming more important than ever that at European level they have the necessary depth and good functioning. In this context, it is important to mention that the European Commission has recently issued its new action plan for the Capital Markets Union. I can promise you that Luxembourg is going to be working on this together with other countries and the Commission in a proactive manner with the aim to ensure that innovation and competitiveness of the European capital markets will be ensured. Based on that, also new opportunities will arise. Recently, the pan-European personal pension product has been developed. I see a lot of opportunities there for Luxembourg, especially also because in terms of insurance, we're an important hub in Europe. This has been confirmed in the context of Brexit. We've been able to attract a dozen insurance companies in Luxembourg. Speaking of Brexit, maybe a word on that negotiation, which is becoming very complicated right now. We have also, and always, as Luxembourg, pleaded for a smooth transition from being inside the European Union and walking out for the United Kingdom, transforming the bridge we had between the UK and the EU single market, transforming that in kind of footbridge. But we're not there yet. The negotiations are ongoing, and we continue to follow this very closely. But obviously, the United Kingdom and London are going to be outside the European Union, and this is also offering opportunities to Luxembourg. We've been able to attract over 60 players in financial services. I mentioned insurance. It's true for some banks. It's true for asset managers and fintech companies. And probably if there is no special agreement done with the United Kingdom, more actors of financial services are going to knock on our doors, and they're going to be most welcomed. We continue to modernize our legal framework, for example, in the field of securitization, where a new bill of law is going to be sent to Parliament soon. The same goes for blockchain, where we've been pioneers in terms of recognizing that an agreement signed through blockchain has the same validity as a contract done in a traditional manner. But in the weeks to come, we're going to enlarge the scope of that legislation, which underlines how important the digital economy has become. Digital players have been the winners of the pandemic crisis because they could function more or less normally during this period. So we need to adjust our legislation to those needs of the digital economy. Digital and sustainable finance are obviously the two ways in which we can modernize and diversify our financial center. We've been working on these two topics since many years. They've been my priorities since the beginning of my mandate, and will continue to be so. Most recently, we have done a world premiere in sustainability in the world of finance by issuing the first sustainability bond worldwide. What do I mean by that? Well, it is the first bond issued by a AAA country that fulfills all the criteria of sustainability of the European Union, which is called taxonomy, as you know, also fulfilling the ICMA criteria, and also making sure that we are working together towards the 17 Sustainable Development Goals. This world premiere was very well received, as the 1.5 billion euro we raised were oversubscribed more than 10 times. It speaks a lot towards the needs and the expectations of the market, and I think that Luxembourg has been a trendsetter in this area. I'm sure you're going to discuss this also in the panels that are organized in the framework of the webinars here by LuxCMA, and I hope that you will be able to shed a light on this innovation and learn together from it and continue on the path of innovation, which is the only one which will ensure the sustainability of our financial center in the future. Thank you very much.
Well, today I actually have the pleasure to start the first LuxCMA seminar, so it's very exciting to be able to cover DLT as a topic. So those are indeed very exciting times for Luxembourg and Europe as a whole. So we'll cover today Luxembourg's future legal framework in the DLT sphere. So Luxembourg's legal framework is currently in the process to recognize and leverage the use of DLT technology for capital market and market infrastructure purposes. So as I'm sure you're aware, the Ministry of Finance submitted the Bill of Law 7637 to the Parliament in July. And our panel of experts that we lined up for you today will tackle the legal and practical aspects brought on by this bill. So the legal portion of the session will cover the main aims and rationale of the Bill 7637, which enables the issuance of dematerialized securities through DLT devices. Then Elisabeth Omes, a partner at EHP, will take us through the amendments that the bill proposes to open up the central account keeper role to record and operate such DLT issuances. We'll then analyze how, from a legal standpoint, a security will be able to be issued directly on a DLT devices. And to tackle the practical portion of the webinar, we also have the privilege to welcome Stéphane Blemus, who is the legal counsel for Société Générale's fintech arm 𝗿𝗺𝗺, and Laurent Collet, a partner at Deloitte. So they'll explain the issue and structuration options that the Bill 7637 is opening up for issuers and market infrastructure players. And our session will be closed by a Q&A. So please feel free to use the Q&A box to ask questions, which then we'll do our best to answer at the end of the session. So to start with the main aims of the bill, so we'll tackle the rationale and its objectives. So what we can say is that the Bill 7637 completes a set of bold past legislative initiatives which saw the Securities Act 2001 be amended to enshrine the use of DLT devices to operate the settlement of fungible securities. However, some uncertainties remained as to whether fungible securities could still be issued directly on DLT devices and be recognized as native tokens with a primary register that is solely kept via DLT. So this initial solution only offered structuring options where an issuer could issue globalized securities or vanilla registered securities with the main primary physical register and a second sort of mirror register that is operated through DLT. So this is where Bill 7637 comes in, as it allows to have a direct issuance in tokenized form of dematerialized securities. So the bill also permits EU credit institutions and investment firms to operate such issuances accounts and to fulfill the role of central account keepers for DLT issuances. So the aim of this amendment is to give more structuring options to issuers and ultimately to foster innovation. But Elisabeth will cover this point more in detail. So today, it's even more exciting to talk about this topic because the European Commission made publicly available its proposal for the EU regulation on crypto assets, with its acronym MiCA. And we can say at this stage, although it's still a proposal, that the Luxembourg legal framework, if it adopts the Bill 7637, will be able to live alongside and in complement to the EU MiCA framework. So Elisabeth will now tell us more on the foreseen changes to the central account keepers operating in Luxembourg and the new players that will be able to make a niche for themselves in that sphere.
Yes, thank you, Philippe, and thank you for LuxCMA to invite me on this panel. So I'm going to talk about the central account keepers. Currently, the entities eligible for acting as central account keepers are settlement organizations, which can be chosen for listed and unlisted securities, and also central account keepers submitted to the law on the financial sector, which can be chosen for unlisted securities. These central account keepers can be Luxembourg credit institutions, Luxembourg investment firms, Luxembourg branches of EU credit institutions, and also Luxembourg branches of EU investment firms. They must apply for a specific authorization in order to provide this activity of central account keeper. So it's not automatically in their banking or investment firm license. Now, the Bill of Law is opening the activity of central account keeper to certain entities and also for certain types of securities. The opening of the activity is made for EU credit institutions and EU investment firms, but it's only limited to unlisted debt securities, so not for all types of securities. And also EU credit institutions and EU investment firms must meet certain conditions for providing these activities. And these conditions are similar but not identical to those that have to be complied with by Luxembourg central account keepers. These have to first comply with adequate professional experience at the level of management and also have robust internal governance arrangements. So these are two conditions that have to be complied with by Luxembourg central account keepers only. There are some, however, common conditions that must be complied with by both existing actors and also new actors, and these relate to the control and security mechanisms of IT systems, which has to be adapted for the keeping of the central accounts, and which have to allow, first of all, the registration in an issuance account of all the securities composing each issue admitted to their transactions. Secondly, the circulation of securities by transfer from one account to another must be possible. Thirdly, the verification that the total amount of each issue admitted to their transactions and registered in an issuance account is equal to the sum of the securities registered in the securities account of their account holders. And lastly, it must be guaranteed that the exercise of the rights attached to the securities recorded in the securities account is guaranteed. One last point that I want to tackle is to remind the audience that the issuers' administrative bodies are responsible for choosing the settlement organization or central account keeper. This may be of importance as the catalog of professionals among which the issuer can now choose the central account keeper is opening to EU credit institutions and also EU investment firms. Now we know that local Luxembourg players are supervised by the CSSF, and the CSSF will also check the compliance of these actors by of the conditions that I just went through. But where there is, in my opinion, a grey area is regarding the monitoring of the EU credit institutions and the EU credit investment firms, of these new conditions for the provision of this activity, whether it is their home regulator who has to monitor the compliance with Luxembourg law, or whether this is an issue that the issuer has also to deal with in order to comply, to make sure that the settlement organization or the central account keeper that he has chosen really meets these new common conditions. Voilà, then now back to Philippe, and any questions about this theme, we're happy to take them afterwards in the Q&A session.
Thank you, Elisabeth. So indeed, this signals more business opportunities in that field, not only for issuers, but for operators. So we'll now cover the second aim of the Bill 7637, which is to focus on the issuance account on DLT ledgers. So to understand why the Bill 7637 is such a game changer, it's crucial to understand the issuance process for dematerialized securities. The main idea is that basically every dematerialized security has to be issued in an issuance account that is kept by the central account keeper and that serves to record the issuance of securities and then to create the security. The amendment by the Bill 7637 expressly recognizes that central account keepers may use DLT devices to make such records. What this really means is that a central account keeper can either use a private or a public DLT to make such records. We can see that such central account keeper will keep and operate a wallet to record such securities that will be settled like a native token. As such, the security will exist entirely in a DLT environment as a native token that can then be settled in a fully fledged DLT environment. So this is really why it's key. So again, as I stated before, there won't be two different ledgers in order to record the issuance of dematerialized security if you decide to go through the DLT way. So now that we described sort of the legal considerations of the bill and the different legal tools that it brings, we'll turn to Stéphane and Laurent, our industry experts, to take us through the practical opportunities that the bill can bring to issuers and to market players.
Yes, thank you very much, Philippe. It's true that in addition to the need of regulatory certainty, designing the operating model of the issuance of DLT-based financial instruments is a key focus, a key assessment for this kind of project. The issue with this kind of instrument is not so much about technological issues than rather legal, governance, and operational issue. The following elements that we will discuss should notably be taken into consideration for this kind of issuance. For example, how to issue a DLT-based financial instruments in an acceptable bank grade compliance, legal and risk departments opportunity. So since the last financial crisis, and especially also the US sanctions, there are many concerns among regulated institutions to minimize the risk related to KYC-AML and to embargoed sanctions regulations. So how to identify the buyers, the sellers, and the holders of the assets when we use a potentially decentralized technology such as blockchain. Also, how could the asset be frozen if needed? For example, if the investor is blacklisted, how to do it in the blockchain? So models have been developed to respond to this issue. There could be the possibility to whitelist the investors, the use of a third party called the oracles, which could have some direct impact on what is directly inputted within the blockchain through smart contracts. There is also, as the assets are linked to keys possessed by the service providers or by the investors themselves, the key management governance is really, really important. So with regard to what we have done within Société Générale Forge, one of the main realizations these last couple of years has been precisely to develop an operating model designed to enhance these bank grade issuance of DLT-based financial instruments. One of the other key issues is how to settle the transaction on DLT-based financial instruments. So if you have only one leg in the blockchain and the other in traditional world for the payments, in the long term, it's pose a problem of efficiency of the blockchain. So today, the settlement is mainly realized in central bank money, due to limitation to commercial bank for settlements. But tomorrow, when the central bank could be digitalized through a CBDC, or when we see the pilot regime, which would allow more broadly to have settlement of financial transaction and DLT through commercial money in token form, stable coins or else, it could be really interesting to see how the settlement issue could be maybe changed by the use of blockchain. Not by going to all the potential structuring options, but what we will discuss now is the main structuring options for the issuance of DLT-based securities. First of all, is the choice of the blockchain for the issuance. Traditionally, there is some kind of presentation of a struggle between public blockchain versus private blockchain. It's not entirely true because, for example, you could issue only the securities on a public blockchain, and you will have all the relevant confidential information within a private blockchain. So there is no problem of bank secrecy or GDPR or information confidential on the issuer directly on the blockchain. So it's not entirely a true issue, but it's true that where you will issue the instrument and where you will provide the information on the issuance is really important. We see that nowadays the use of private blockchain is mainly about cutting settlement costs, while we see that in the not financial instruments, crypto assets, it's more about the use of public blockchain. Within the regulation, we see that there is a need for neutrality with regard to the technology in order for the markets to find the correct balance, the correct technology to use in a broader sense. Within Société Générale Forge, we try to be as much as possible neutral with regard to the evolution of the blockchain technology. It's true that we believe more in public blockchain as a golden source for the issuance, and to have maybe the debate between internet versus intranet with regard to the traceability of the information. but the market is really on its early stage, so we'll see how it will be assessed in the future. The other debate is between native and non-native DLT-based securities. So whether the issuance is initially recorded on the blockchain, so it is a native securities on the blockchain, or whether the token and the token, the non-native token, is only a representation of an existing asset issued outside of the blockchain, and potentially for there again cutting costs with regard mainly to the post-market activity. So there is a debate between these two kinds of issuance, and the mainly for the native tokens, the Luxembourg law is very interesting because there were remaining questions about the possibility to have under Luxembourg law native tokens or native financial instruments issued on blockchain. The next issue is listed versus unlisted securities. So nowadays, as there is some issue with regard to the listing of securities issued on blockchain due to EU infrastructure regulations, for example, CSDR and Settlement Finality Directive. Most of the issuance of financial instruments are unlisted instruments, and that's the aim precisely of the Luxembourg law. So it is mainly private placement, but in the future, how it will evolve with the private with the pilot regime, it's to be seen. And the last point is about liaising the primary to the secondary market, notably with regard to the role of the service provider. As the aim is to for blockchain is both to create new opportunities but also to cut costs. It's really important when you issue financial instrument on the blockchain to really assess with regard to governance issue and to cost issue, how is the best balance between what is done on the primary and the secondary market. So to have the most efficient infrastructure, both for the issuer and for the investor, to lessen the number of intermediaries and to find the most efficient way to use blockchain. And in this regard, the Luxembourg law in 2019 and also this project law is very interesting. What has been said about service provider is my next point. What about the role for the custodian? And the central account keeper is very key. We see that with regard to the role of the custodian, the reference and the assimilation that is being done between, for example, between the issuing accounts and the encryption and the recording of financial instruments on the blockchain poses several questions for traditional custodian, how they could propose their service to investors, potentially to issuers. How it will be evolved through the use of the blockchain is really a key point. And when we see the pilot regime, there will be an impact. For example, when we see the possibility of DLT-MTF, which would be an actor who will register, settle, and safekeep and also trade, facilitate the trading of DLT securities. Potentially, there could be some new interactions between traditional infrastructure players. And also linked to this role of the custodian is the question of the liquidity of the assets, issued on DLT. We are talking about unlisted securities, so securities that are less liquid than listed securities. So how to enhance the liquidity of DLT-based financial instruments? There is really a need to discuss between several regulated institutions to find the best way to lessen the risk of double booking, to lessen the costs related to primary and secondary markets, and to find the most effective way to provide OTC trading on such financial instruments, in order to make this market develop from time to time.
Super, thank you, Stéphane. And just to bounce back quickly on what you said, so indeed, the Bill 7637 allows for either the settlement of securities that are non-native and also for the issuance of native tokens. So that gives us a really good toolbox. Now over to Laurent to also to second the practical considerations.
Sure. Thank you very much, Philippe. Yes, indeed. I mean, crypto assets are not only legal text or documentation or slide. It's also a practical project proof of concept, which are currently going on. We just take some few of them, not all of them. But I mean, as Stéphane already mentioned, Société Générale has been very active in the issuance of crypto security bonds during those last year, and this year they have also managed to organize full transaction, including the settlement of bonds versus a delivery in payment, and payment was done in central bank digital currency, which is also another topic that you have heard and that you will heard in the future. We see also different projects and also different approach of addressing these opportunities. We see that, for example, Clearstream has developed a DLT environment and ecosystem to manage the securities in the context of collateral management and facilitate the exchange of those securities among a list of participants. Among other, we have Credit Suisse, Commerzbank, UBS, but as well Euroclear. This is a way to approach basically the opportunities in line with crypto asset, focusing on a specific instrument or a specific customer need. There are also other approach, as we see in Switzerland. They have basically launched for 2 years now, for 3 years now even, a large project under the SIX infrastructure, where basically they aim to cover the full value chain from the issuance, the trade, post-trade, as well as custody environment on the crypto asset. For achieving this objective, they've been supported by FINMA, which has addressed a long legal and regulatory frameworks. So different approach, different kind of project, actual project. We tend to believe that in the current context, a good approach would be, first of all, to focus on answering some specific customer needs or business needs in the first instance to deliver the actual potential of this new technology before engaging in large project, which could be also a challenge. And we believe also that on a practical example, for Luxembourg, we have some huge opportunities to address some business need in line, for example, with less liquid securities. And I have in mind all the international debt, but also the new opportunities in line with some debt instruments related to green bonds or ECG bonds. And this is clearly basically an area on which all Luxembourg marketplace can focus and leverage on with this new technology. If we move to the next slide, Philippe, these are also some lesson learned that we can have at this point of time, and the journey is just beginning for sure. First consideration is that you basically need a legal and regulatory framework. It's a must-have to continue a strong business development of the crypto asset. You do not buy a house without a legal framework. You do not develop a crypto asset project without having a minimum regulatory framework. And this framework is there. Thanks to Luxembourg, as we have said, we pioneer in developing this bill, including the issuance, distribution, registers of those crypto assets. But also, as you may know, and we have already addressed, the European Commission has launched 10 days ago the MiCA regulation as well as a pilot regime, which will aim to basically provide harmonized frameworks around crypto asset within Europe, and which will cover not only the crypto asset instrument, but also the full services around those crypto assets, but also the issuers and the asset servicing aspect of the crypto crypto asset, from issuance, registration, distribution, exchange, settlement, and custody services. Quite a large piece of the regulation that will basically, we believe, be the foundation of the new crypto digital European landscape in the future. Important to mention also that these new regulatory frameworks, either in Luxembourg or in Europe, the foreseen European Commission frameworks, does not aim to replace the current regulatory frameworks. Financial instrument as defined on the MiFID will remain and still be a financial instrument, either being crypto asset or not. And the idea is still to leverage from these regulatory frameworks. And this covered also all the MiFID, EMIR, CSDR, market abuse, I mean, all the regulations which refer to this concept of financial instrument. The new regime what the European Commission is doing is to basically cover the gray area where basically there was no legal frameworks defined in line with crypto assets. And also defining the way we services and we issue crypto assets. This framework, it is also important. It's not only a new piece of regulation and constraint that the Commission is putting on the financial marketplace. We truly see this new framework as a new opportunities to develop new services, new instrument, new distribution. We do see these frameworks and globally all the crypto assets as tools which will disrupt or make the current stakeholders disappear. Clearly not. This will stay and this will remain. This is much more a new opportunity of developing new instruments, new way to distribute this instrument and to issue those instruments in the future. And all these frameworks represent a huge opportunity for our marketplace to basically play a key role in the future capital market in Europe and globally, based on our current know-how, expertise that we have on this instrument and leveraging from the new technology.
Okay, wonderful. Thank you so much, Laurent and Stéphane. This is really, really some very quality interventions. So in the midst of all our discussions, we actually received quite a bunch of questions from the audience. So I take it that this really hit home. So this is really cool. So we actually received a question that asks, so in the legal framework, what's the benefits of using blockchain versus a digital centralized ledger? So the first thing that comes to my mind for that, I mean, it's really with regard to the actual benefit of blockchain itself. So by nature, it's decentralized and it's about the quality of the data. But maybe if we hear from our industry experts, so Laurent and Stéphane, what do you think of that? What would be the benefit of using blockchain versus digital centralized ledger?
I think according to, depending on a project, the good blockchain is really to assess by the business team. For example, when we get to middle long term, CSR policy question will be really important. So how would the energy issue be handled? So will it be confirmation of the transaction through proof of work or proof of stake? How would this question would be handled by blockchain? So it is really a bigger and bigger issue for regulated institutions. So for example, we will see a trend progressively from proof of work with a big mining activity to proof of stake. And also the main issue, I think, from a business perspective is really interoperability. So in the long term, and it's really a bet sometimes, what would be the best solution which would allow some greatest opportunity with regard to interoperability of the various marketplaces and the various service providers and investors. And so we see two big trends between public and private blockchain.
So if I understand correctly, then it really depends on the project that you're trying to run, basically. So we also received a question that asked whether the bill provides specifications as regard the type of DLT that could be used, and are there limitations as regard this choice? So I think the first question also covers that, but to make it quick, no, actually, the bill is as neutral as possible. So that's also, I think, a will of the Luxembourg legislator, which is to keep it light touch and to be as broad as possible in order to not be caught by new technological advances. So there's no need to sort of define something that can change tomorrow. So, and then we also received a question about how the Luxembourg draft bills compare with similar initiatives in other EU countries, like France or Germany. I don't know, Elisabeth, if you want to take that on, or
I think Laurent wanted to take that one.
Yes.
Thank you, Elisabeth. No, well, you can complement, of course. No, I think this is really interesting and good question. I mean, we see already in Switzerland, Germany, France, different countries issuing some.
Laurent, you're on mute.
Maybe Elisabeth, you can step in.
Well, actually, I wanted to talk about the other question we got.
Not really, but I mean, I don't know which question I have to answer to. Hello?
Laurent, you can well take either how does Luxembourg compare to France or Germany, or the type of DLT. These were the two pending questions.
Okay, could you hear me now?
Yeah, perfect.
Okay, sorry. Now, well, Luxembourg compared to the other country, this is clear that right now we see different local initiatives. As far as Luxembourg bill is concerned, we believe that the bill has been drafted and is organized, that is open, that we should not go against what is defined in other countries. But nevertheless, it will be the role of the European Commission to make sure that we have, at the end of the day, a full harmonized frameworks in terms of legal and regulatory frameworks within Europe. But as far as Luxembourg is compared, I think it's the way it's organized is that it leaves much more opportunities that basically be against what France, Germany, or Switzerland has designed, which has go maybe in much detail. The way Luxembourg is organized is provide much more room for opportunities rather than constraint at this point of time. And also the way this bill is organized and designed is also clearly aligned with what we have seen so far in the European Commission package. So far so good.
Perfect.
Philippe, I was going to ask to answer the question regarding the question whether we feel that Luxembourg has the right courts and the right legal mechanisms to resolve disputes quickly for these innovative technologies. And since I'm also doing litigation, I can answer this question. So I do feel that we do have the right courts. Our courts are confronted to many different complex questions, be it litigations on enforcement of pledges, or since the Madoff affair, Luxembourg courts got a really good knowledge of investment funds and how they function. So I do not have a doubt that with also players in Luxembourg like Bitstamp and Bitflyer, Luxembourg courts will at one stage have acquired a good knowledge of innovative technologies. And I do concede that lawyers representing clients before courts in these new domains must make some kind of educational brief, giving all the information to the judge so that they can solve the dispute. But that's, I think, for any domain as well, for be it surrogate mothers or innovative technology. So I don't have a doubt. The only doubt, and that's for all courts, I think, is that do we have the means to resolve these quickly? Courts can take their time, and we do have summary courts who can give their orders quite quickly. But obviously, I think that's the same for any jurisdiction where courts can be court proceedings can be lengthy, but we do also in Luxembourg have mediation and arbitration, which is also coming up. So I don't really feel much worried about our judiciary taking on this new type of litigation.
Well, perfect. So it seems that all the stars are aligned for Luxembourg, and we'll just take one last question. And that it was asked whether the securities under the bill that are natively issued would only go to sophisticated / professional investors, or is it also for retail investors, or both? So what we can say is that definitely the bill does not restrict that. And so as long as you're touching retail investors and making public offers, that actually would depend on whether your security would constitute financial instruments and then be caught under the MiFID or prospectus regime, or would actually be analyzed after a case-by-case analysis, or would fall within potentially the new MiCA regime. So this is also something that needs to be tracked, but definitely the law as it stands does not make a specific sort of choice whether what types of investors would be able to subscribe to these securities.
Philippe, what is also interesting in line with the financial digital package, and more particularly the pilot regime that the European Commission has issued, is that they realize clearly that in the future, the retail investor will have the opportunity to access DLT market infrastructure. So
Absolutely.
today, where you have to be either a broker-dealer to access to a stock exchange, or a participant to access the CSD platforms, in the future, under the pilot regime, the EC will recognize a retail investor, giving the opportunity to access those platforms with some AML, KYC element, that's for sure. But I mean, what I just want to stress is that what the European Commission is currently designing in the future is also a change in the way we know the business model right now, with the access of retail investor, with also a reorganization of the way the trade and the post-trade are organized. So we see obviously some dramatic change in that regard as well.
Yeah, absolutely. And what's great is that in the end, the Luxembourg framework is really complementary to these initiatives, and really sort of enables Luxembourg to be a platform for issuers and market operators. So in terms of next steps, the Bill 7637 is still in the process of receiving comments from various industry groups. The outlook appears to be currently positive. So, all the stars again look to be aligned for the next parliamentary vote in order for this bill to go through, and then to really put this bill into the legal toolbox for issuers, operators to benefit from these wonderful structuring options. So this was a really, really great session, and thank you all for attending. And now I have the pleasure to welcome Arnaud Delestienne, who is a Director of International Capital Markets at the Luxembourg Stock Exchange, to talk to us about the next webinar, so digitalization versus tokenization.
Thank you, Philippe. And I must say thanks to all for this great comprehensive overview of the Bill 7637. A lot of food for thought, and I'm sure that we'll make use of our webinar next week to dive further into some of those topics that we've touched upon today. Of course, we will not focus on the regulatory aspect, but much more on the practical aspect, and we will explore how digitalization and tokenization can actually contribute to making public capital markets more efficient, particularly from an issuance and servicing angles in terms of financial instruments. So we'll take stock of what are the latest developments, the latest trends, but we'll also discuss how digitalization and tokenization can nicely complement each other, or whether we should rather regard both as being the two faces of the same coin. So controversy is not to be excluded from that webinar, particularly if I look at the exceptional lineup we have for that webinar in terms of panelists. We'll have a recognized blockchain specialist with us. We'll have service providers, technology providers, and also representatives from the banking sector or issuer sector. So same person having two hats here. And so I'm really delighted to have these experts with me to try and continue this very interesting discussion And so, like in any kind of good teaser, I say be ready to tune in next Wednesday for our next live webinar at 2 p.m.
Perfect. Thanks so much. And so the invitation will be sent this afternoon. So be on the lookout for that. It'll be.
As we speak.
It is already out. Well,
yeah,
there we go.
It is already out.
So have a great day, and thanks again, everybody, for tuning in, and thanks especially to our panel today, which was really exceptional and really wonderful and exciting times ahead. Thank you all.